FedEx. Is FedEx stock a buy right now? Or Nike stock a buy right now? Let's check it out. What is FedEx? FedEx is a company which engages in the provision of a portfolio of transportation, e-commerce, and business services. FedEx have a dividend of 0.9%, with is $2.6 annually. Bulls say. Outside a prolonged recession, FedEx's U.S. ground package delivery operations should continue to enjoy robust growth tailwinds rooted in favorable e-commerce trends. FedEx's massive package sortation footprint, immense air and delivery fleet, and global operations knit together a presence that's extraordinarily difficult to replicate. During its nearly 5-decade history, FedEx has weathered multiple economic cycles. While short-term results may suffer, the firm's powerful parcel delivery network is firmly established. Bears say. FedEx's parcel volumes are vulnerable to downturns in global trade, along with U.S. and European macroeconomic conditions. These factors are currently facing elevated downside risk from virus-related disruption. Amazon is rapidly building out its last-mile logistics capabilities, which raises the risk that it offers its capacity to shippers outside its own retail network, competing head-to-head with the incumbents. Heavy infrastructure investment and TNT headwinds have yielded anemic free cash flow generation in recent years. Analyst ratings. Buy, 71%. Hold, 25%. Sell, 4%. Nike. What is Nike? Nike engages in the design, development, marketing, and sale of athletic footwear, apparel, accessories, equipment, and services. Nike have a dividend of 0.8%, with is $1.10 annually. Bulls say. Nike has a great opportunity in fast-growing markets like China. More than 70% of Nike's growth over the next 5 years may come from outside North America. Nike's triple-double strategy of increased innovation, direct-to-consumer sales, and speed may improve margins and share. Membership growth in its digital channel has exceeded expectations. Nike's gross margins may expand by a couple dozen basis points per year through automation, e-commerce, and higher prices. Nike is actively shifting sales to differentiated retail in North America to increase full-priced sales. Bears say. 19 forced the temporary closure of Nike-owned stores and those of its wholesale partners all over the world, and the crisis is not over. More disruptions would negatively impact its sales. Nike is exposed to a changing retail landscape in the U.S. as department, shoe, and sporting goods stores must compete with e-commerce and discount retail. Store closures have affected Nike in recent years. The athleisure trend has benefited some of Nike's more fashionable competitors, such as Lululemon and Adidas, more than Nike. The pandemic seems to have made athleisure even stronger. Analyst ratings. Buy, 87%. Hold, 10%. Sell, 3%. As always, be sure to let me know your thoughts down in the comments. Be sure to smash that like button. Thank you so much for tuning in, and I will catch you in the next video.